Hey everyone, and welcome. Today, we're diving into some explosive news that's got the financial world buzzing. Elon Musk just made a colossal move, buying about $1 billion worth of Tesla stock. That's right, a whopping $1 billion. This isn't just any purchase, it's his biggest open market stock buy ever, and his first in years. What does this mean for the electric vehicle giant? Let's get right into it. So, Elon Musk, the CEO of Tesla, just dropped about $1 billion to snap up over 2.5 million shares of his own company. This happened recently, around mid-September, and it immediately sent shockwaves through the market. Think about it. The boss putting that much of his own money back into the business? That's a huge statement. This wasn't just a quiet little trade. The stock market went absolutely wild. Tesla shares, which trade under the ticker TSLA, jumped significantly, climbing around 6 to 8% in early trading after the news broke. This surge was massive, pushing the stock price to its highest point since January and wiping out all its losses for the year. In fact, Tesla stock has seen an incredible run this month, soaring about 30% in September alone. This kind of momentum is electrifying investors and traders alike. Why is this a big deal? Well, in the investing world, when a company's leader buys a ton of their own stock, it's often seen as a powerful vote of confidence. It tells everyone that the person who knows the company inside and out believes it's headed for great things. Many analysts are calling this Musk's slamming the accelerator on his commitment to Tesla, especially after a somewhat bumpy start to the year for the stock. This purchase is being interpreted as a clear signal of his unwavering belief in Tesla's future. And when we talk about Tesla's future, we're not just talking about electric cars anymore. Elon Musk is pushing the company far beyond its roots. He's talking about a future dominated by robotaxis, artificial intelligence, and humanoid robots he calls Optimus. Think about that for a second. He recently confirmed that the next generation of Tesla's full self-driving system will have 10 times the data, a major leap forward in capability. The Robotaxi vision is already becoming a reality. Tesla has expanded its Austin Robotaxi service zone from about 20 square miles to a massive 170 square miles. They've also received permits to start testing these autonomous vehicles in Nevada, opening up a whole new state for their operations. These milestones are a huge step towards a future where your car might pick you up and drive itself. But it's the humanoid robots that really get Musk excited. He's even said that Optimus is going to be the greatest product in the history of humanity. He envisions these robots helping humans with everyday tasks, from cooking dinner to walking your dog. Musk believes that eventually about 80% of Tesla's total company value could come from these robots, not just from selling cars. That's a mind-blowing long-term goal. Speaking of ambitious goals, this stock purchase comes at a very interesting time. Tesla's board has proposed an unprecedented pay package for Musk, a deal that could be worth over $1 trillion over the next decade. If he hits all the targets, this could make him the world's first trillionaire. This isn't cash, though. It's all in stock. The conditions for this pay package are truly audacious. To unlock just the first chunk of shares, Musk has to convince investors that Tesla's total company value is worth $2 trillion. That's double what it is today. And to get all of the proposed shares, the company's total value would need to skyrocket to an astonishing $8.5 trillion. For context, that would make Tesla worth more than any company in the world right now, even bigger than chip makers like NVIDIA. Shareholders are going to vote on this massive proposal in November. Some see Musk's recent stock purchase as a strategic move to show his commitment and win over investors ahead of that crucial vote. Others view it as a genuine bet on the company's ability to achieve these unbelievable milestones, especially with the robotaxi and humanoid robot businesses. It's a high-stakes game, and everyone's watching. However, it's not all smooth sailing for Tesla. The company is facing some serious challenges. Its traditional electric vehicle business has seen a slowdown in sales this year. For example, in the second quarter, automotive revenue was down about 16% from a year ago, and global vehicle deliveries fell by about 13%. Overall revenue also saw a significant drop, around 12%, which is its steepest decline in years. Even in China, a key growth market, deliveries fell by about 13% in the first part of this year. Tesla also has fierce competition now. Automakers like Hyundai and General Motors are stepping up their game in the electric vehicle market, offering more alternatives than ever before. This intensifying competition, along with the expiration of federal tax credits for electric vehicles at the end of September, is putting pressure on Tesla's sales and profit margins. Another factor that has impacted the company is Elon Musk's political involvement. His work in Washington earlier this year and his affiliation with President Donald Trump raised concerns for some investors and reportedly contributed to a backlash that hurt Tesla's sales, especially in places like Europe. While he's reportedly pulled back from that work, the impact has been felt. Looking at other insiders, it's a mixed bag. Oracle CEO Larry Ellison bought over 1,250 Tesla shares for about $1 million back in February 2020. More recently, Joe Gebbia, a co-founder of Airbnb and a Tesla board member, bought over 4,000 shares for just over $1 million in April. But generally, over the past year, before Musk's recent purchase, we actually saw more selling than buying from other insiders. For example, Elon's brother, Kimball Musk, sold off over $75 million worth of shares in the last year. This tells us that while some insiders are buying, others have been cashing out. So, what do the financial experts say about all of this? The picture is certainly complex. On one hand, Tesla scores well on things like growth and momentum. But when you look at how much you're paying for the company's earnings, it looks incredibly expensive. The stock price is about 200 times what the company earns, which is staggering. To put that in perspective, the average for the overall market is around 27 times earnings, and other big automakers like Ford are around 15 times earnings, while General Motors is about 9 times earnings. This high valuation makes some analysts very cautious. One expert noted that Tesla shares are light years away from a price where they would consider buying. Others are more optimistic, seeing Musk's commitment and the potential of robotaxis as game changers, setting a target for the stock price to reach about $500. It's a classic Wall Street split, high risk, but also potentially high reward, if Musk's grand vision becomes a reality. At the end of the day, Elon Musk's massive stock purchase is a clear signal. He's all in on Tesla's audacious future, especially its push into artificial intelligence and robotics. Whether that future unfolds as dramatically as he envisions, and whether the stock can justify its current price tag, remains the multi-trillion-dollar question. All right, that's the latest breakdown on Tesla and Elon Musk's huge bet. If you found this information helpful, make sure you hit that like button, subscribe to the channel for more market updates, and ring that bell icon so you never miss a video. Thanks for watching, and I'll see you next time.